Dr. V. Shantamina, Head and Assistant Professor of Commerce, V. Vivanya Perumal College for Women, Virudhunagar. In this video, we are going to see about Bank Reconciliation Statement. What is Bank Reconciliation Statement? Why it is prepared? First, all the banking transactions in the business are entered in two books, that is cash book and passbook. The cash book is maintained by the businessman and the passbook is maintained by the banker. Suppose we sent rupees 1000 to bank, then in this we entered a entry, that is bank account debtor to cash account, that is bank account is debited and cash account is credited. So both the cash account and bank account, that is entry is made in both the cash book and passbook. So at any time, at any day, the cash book is tallied with the passbook. That is bank column in the cash book must be equal to the passbook. But at all times it is not tallied. There are many reasons. The transactions entered in the cash book but not entered on or before a particular date in the passbook, or the transactions are entered in the passbook but not entered in the cash book. So in that case, what we will do? Cash book is compared with the passbook. Next, the reasons for difference are found out. Then bank reconciliation statement is prepared. Right. What are the reasons for differences? The first reason is checks issued but not presented. For example, we issued a check to one person, but that person is not going to present it in the banker. In that case, the entries are made only in the cash book. Passbook not entered. So the variation is, the reason for the difference is the first one. Then second one, checks paid into bank but not collected and credited. In that case, we received a check. Then we entered it into our cash book. The check is sent to the bank, but the bank not yet collected the amount and credited the amount in our account. In that case, there is some differences between cash account and bank account. Third one, interest on current account credited in the passbook but not entered in the cash book. So sometimes banker credited the interest amount in the passbook, but it will not be informed to the businessman. In that case, cash book is not credited. So in that case, there is some differences. Then next one is checks dishonored and debited in the passbook but not entered in the cash book. In what is check dishonored? We sent a check to the banker. The banker sent it for collection, but that check is bounced. That is, the check is not a valid check. In that case, the entries are made in the passbook but not in the cash book. Next one, bank charges debited in the passbook but not entered in the cash book. Sometimes we sent a standing instruction to a banker to pay our rent or to pay our salary, etc., something to other accounts. In that case, bank charges some amount. That amount is debited directly by the banker in our passbook. But that entry is not made in our cash book. So in that case also there is some differences between cash book and passbook. Then in another case, amount directly paid into bank by a customer credited in the passbook but not entered in the cash book. For example, if X has to pay rupees 10,000 to us, that person X directly went to the bank and paid the amount to our account. In that case, our account is credited with that rupees 10,000, but the entries are not made for that 10,000 in our cash book. So in that case also there is some differences between cash book and passbook. Next, so the differences are found out. The next step is the bank reconciliation statement. So the bank reconciliation statement is prepared on a particular date. The statement prepared starting either the cash book balance and ending with the passbook balance, or from the passbook balance and ending with cash book balance. So the bank reconciliation, usually we started with bank balance as per cash book and ends with balance as per passbook. At the same time, as it may be start as balance as per passbook and ends with balance as per cash book. It all depends upon the problem given. Right. So the preparation of bank reconciliation statement falls under two divisions. Number one is deposit is more than withdrawal. That is, our cash balance shows us a debit balance. In that case, we are in an ordinary position. Sometimes withdrawal is more than the deposit. In that case, it is called overdraft balance. So, ordinary balance and overdraft balance. The next one is, suppose we are having an example. So, the balance as per cash book is taken. From the balance, we have to add. Number one, check issued. Already we seen that we issued a check drawn but not presented. So not presented by the customer. So in that case, the passbook is compared. The balance in the passbook is higher. So we have to add that balance. Next one, direct deposit made by the customer into bank, not recorded in the cash book. In that case, the customer directly pay the amount to the bank. So the passbook amount is higher compared with the cash book balance. So the passbook balance is higher. So that amount should be added. Next one, dividend or any income collected by the banker. So if the bank collect any amount, in that case the passbook is higher compared with the cash book. So in that case also it is added to the balance. Next one, interest. If the banker collect any interest, in that case the passbook balance is higher compared with the cash book. So the bank passbook is higher, so the balance should be added. So we started with cash book. We have to see the passbook. If the balances are higher, in that case, we have to add the balance. Sometimes we have to see about passbook. In that case, sometimes balances are low, so we have to less the amount. What are those situations? First one is checks paid and deposited into bank, but bank not yet collect the amount, so the passbook balance is less, so we have to deduct the amount. Next one, payments by the bank. So we give some standing instructions to the banker. As per the instructions, the bank pays some amount to other persons. In that case, the bank deduct the amount from our account. So the passbook balance is less compared with the cash book. So the amount should be deducted. Next one, bank charges. The bank charges also directly given by the bank. So collected from our account. So the passbook balance is low compared with the cash book. So it is also deducted. At the same time, checks deposited but dishonored and checks issued and recorded in the cash book as deposited into bank, but the same was not deposited into bank. In that case also, and check issued but not recorded in cash book. At the same time, interest on bank deposits recorded in cash book but not credited by the bank. In all these cases, the balance as in passbook is low compared with the cash book. So if the passbook shows a less balance, it should be deducted. So these all balances are deducted from the balance. So add all the amount and put it in the outer column and deducted from the balance amount. We get the balance as per passbook. So we started from balance as per cash book and we ends with balance as per passbook. At the same time, overdraft as per passbook. We started from overdraft balance as per passbook and ended with overdraft balance as per cash book. These two circumstances, the same rule is followed. Coming to the next one. If we are taking the balance from passbook, so first we are taking balance as per passbook. We already saw if we take the balance as per passbook means it should be ended with balance as per cash book. So in that case, the balance as per passbook is started and we add certain items and we less certain items. These all items are already shown in the previous case. So as per the same rule, we follow these addition items and deduction items. The balance is balance as per cash book. Suppose if we started the balance as overdraft, in that case overdraft balance as per cash book and we ends with overdraft balance as per passbook. Right. First one, illustration. On 31st December 2024, your cash book showed a debit balance of rupees 3,500. So normal balance. So balance as per cash book rupees 3,500. Right. Before the date, you had issued checks amounting to rupees 3,200. So we issued a check rupees 3,000 to someone but they are not presented for payment. So we issued a check. So the amount will be deducted from our cash book. We sent that check to the bank, but we sent the check to the customer, but that customer not yet presented in the bank. So the balance as per cash book is low, but balance as passbook is high. So passbook shows a high balance, so it will be added. Then next one, a check of rupees 600 paid by you into bank. So a check of rupees 600 paid by us to the bank was not credited. So we received a check from someone. We entered it in the cash book. So the cash book balance is high. We sent a check to the bank, but the bank is not collect the amount. So as per the balance in the passbook is low compared with the cash book. So passbook shows a less balance, so that amount should be deducted. Next, there were entries for interest on current deposit rupees 35. So the bank give interest of rupees 35 in our account, and the bank also charges rupees 8 in the passbook. So if the bank give interest of rupees 35 means the balance as per passbook is high, so the amount of 35 should be added, and in that case the balance as per passbook rupees 8, so the amount is deducted from the passbook. So compared to the cash book, passbook shows a less balance, so that 8 rupees should be deducted from the balance. So we started as balance as per cash book, and we ends with balance as per passbook. So first, balance as per cash book rupees 8,500. Next one, the check issued but not presented rupees 3,200. That amount should be added. Then the second amount to be added is interest on current account credited in the passbook but not entered in the cash book. So that amount is also added. So the 3,235 added and put it in the outer column. That amount is added with the balance as per cash book. So the total amount is 11,735. Then we have to less the first amount, checks paid into bank but not collected and credited. So the 600 amount should be deducted. The second amount to be deducted is bank charges debited in the passbook but not entered in the cash book. So the 8 rupees also deducted. So add these 600 and rupees 8. Put it in the outer column. So that amount is deducted from the 11,735. So the final balance is 11,127. That is the balance as per passbook. So we started from balance as per cash book and add some items and less some items. So we finally found out the balance as per passbook. Hope you are all understand about the bank reconciliation statement, how it is prepared, and the way of preparing, the steps in preparing bank reconciliation statement. So have a good day. Thank you.